Have you ever stopped and thought about where money actually comes from? You might hold a bill or a coin in your hand every day, but have you ever wondered how it all began? The history of money is full of surprises, from bartering goods to using coins. From paper money to digital currencies like Bitcoin, money has gone through an incredible journey. And in this video, we are going to explore that hidden history step by step, uncovering secrets that most people do not know. Let's start with a question. How did humans trade things before money existed? The answer is simple. Bartering. Bartering is when people exchange goods directly for other goods. For example, a farmer might trade a sack of grain for a goat. Sounds simple, right? But in reality, bartering had many problems. The first problem was what economists call a double coincidence of wants. This means that you had to find someone who not only had what you wanted, but also wanted what you had. Imagine trying to trade a goat for grain. You would need to find the exact right person at the exact right time. It was not easy at all. The second problem was value. How many goats are worth one sack of grain? Or how much cloth is worth a goat? There was no standard measurement, which often led to disagreements. People could argue and fights could even break out over trades. The third problem was storing wealth. You cannot store goats or sacks of grain for a long time. Grain could spoil, animals could die, and it was very hard to keep your wealth safe. Despite these challenges, bartering worked for thousands of years. It was the first step in the evolution of trade. Bartering taught humans the importance of value, trust, and negotiation. But people soon realized that there had to be a better way, a system that is easier, more reliable, and universally accepted. That search for a better system led to the invention of the first forms of money. People started using things that were easier to carry, easier to divide, and accepted by everyone. This was the start of coins and later paper money. After thousands of years of bartering, humans finally found a better way to trade: coins. Coins were small, portable, and had a standard value, which made trading much easier. The first coins appeared around 600 BC in a place called Lydia, which is in modern-day Turkey. These coins were made of a naturally occurring metal called electrum, a mix of gold and silver. Imagine holding one of these coins in your hand. It was not just money, it was a symbol of trust. Coins had many advantages over bartering. They were easy to carry, you could divide them into smaller parts, and everyone accepted them. Suddenly, trade became faster and safer. People no longer had to travel long distances with goats or grain to get what they wanted. Coins made life simpler and more organized. As time passed, coins spread across the world. Empires like the Greeks and Romans made coins for their economies, and each coin carried the face of a ruler or a symbol of power. Coins were not only money, they were a way to show who was in charge. After coins, the next big change in money came with paper. Paper money first appeared in China over 1,000 years ago during the Tang and Song dynasties. At first, it was not official currency, but a kind of promissory note, like a receipt for gold stored in a safe place. People could carry paper notes instead of heavy coins, making trade even easier. Paper money slowly spread to other parts of the world. In Europe, banks started issuing paper notes in the 17th century. These notes promised that the holder could exchange them for gold or silver. In other words, the note was backed by real value, and people trusted it. Without this trust, paper money would have been worthless. The interesting part is that both coins and paper money were more than just tools for trade. They reflected power, culture, and innovation. Kings and emperors stamped their faces on coins. Banks carefully designed notes to show trustworthiness. Money was becoming more than a way to buy goods. It was becoming a system built on trust, organization, and shared belief. Coins and paper money set the stage for the modern financial world. They allowed economies to grow, trade to expand, and wealth to be stored and transferred more efficiently than ever before. But the story of money does not stop here. The next stage of money would completely change the way humans think about value and exchange. Fiat money, and later, digital currencies like Bitcoin. As coins and paper money spread, a new form of money began to take shape. Fiat money. Unlike coins backed by gold or paper notes that could be exchanged for precious metals, Fiat money has no intrinsic value. Its value comes entirely from trust, the trust that governments and people place in it. Today, almost all the money we use, whether in cash or in banks, is fiat money. The word fiat comes from Latin and means, let it be done. Essentially, fiat money works because the government says it is legal to use it, and people believe it. Without this shared belief, money would not function. Imagine if people stopped trusting a currency. Inflation would rise, prices would become unstable, and the economy could collapse. This shows that money is not just coins and paper, it is a system built on trust. Alongside fiat money, modern banking systems developed. Banks started keeping people's money safe, lending it to others, and even creating credit. Banks allowed people to store wealth without having to carry heavy coins or stacks of notes. They also made trade faster by issuing checks and bank transfers. Central banks, such as the Bank of England, were created to manage money supply and maintain stability. They could influence interest rates, control inflation, and prevent economic crises. Central banks became the backbone of national economies. For example, when the economy slows down, a central bank might lower interest rates to encourage borrowing and spending. Conversely, if prices rise too quickly, it might raise rates to slow inflation. Fiat money and banking together changed the world. Trade could happen across countries more efficiently. People could borrow to start businesses. Governments could fund public projects, and ordinary citizens could save money securely. However, this system also created risks. Too much borrowing, bad financial management, or loss of trust could lead to financial crises, as history has shown many times. An interesting hidden fact is that most of the money in modern economies is digital, existing only as numbers in computer systems. You rarely handle the full value physically. This is why online banking, credit cards, and digital transfers have become so important. The concept of money is now more abstract than ever. It is no longer just coins or paper notes. It's trust, recorded digitally and recognized worldwide. The evolution from coins to paper to fiat money shows how humans have always adapted money to meet their needs. It's a story of innovation, trust, and convenience. And yet, even this system was about to face a new revolution. Digital currencies like Bitcoin, which would challenge traditional banking and the very idea of government-backed money. As the world moved further into the 20th and 21st centuries, money began to take on a new form: digital money. Unlike coins, paper, or even fiat, digital money exists mostly as numbers in computer systems. When you check your bank balance online or make a payment with a credit card, you are using digital money. It is convenient, fast, and almost invisible, but it has completely changed the way we think about money. The rise of digital banking made transactions easier across the globe. People no longer needed to carry cash or travel long distances for trade. With just a few clicks, money could move from one country to another in seconds. Banks, online payment systems, and mobile apps created a network that allowed global trade to expand faster than ever before. But perhaps the most revolutionary change in modern money came with cryptocurrencies, especially Bitcoin. Bitcoin was created in 2009 by a mysterious person or group using the name Satoshi Nakamoto. Unlike fiat money, Bitcoin is decentralized. No government, bank, or single authority controls it. Instead, it relies on blockchain technology, a secure and transparent system where transactions are verified by a network of computers. Bitcoin and other cryptocurrencies introduced a new idea: money that is independent of governments and borders. People around the world can send or receive Bitcoin without relying on banks. It also has a limited supply, which means it cannot be easily inflated like traditional currencies. Many see Bitcoin as digital gold, a way to store value in a world where fiat money can lose its purchasing power through inflation. An important hidden fact is that Bitcoin and other cryptocurrencies are still very young. While they offer incredible opportunities, they are also highly volatile. Prices can rise or fall dramatically in a short time, which makes investing in them risky. However, they represent a new era of money, a system built on mathematics, trust in technology, and a global network rather than a single government. The transition from physical coins and paper to digital money and cryptocurrencies shows how humans continuously innovate to make money more efficient, secure, and accessible. Money has evolved from something tangible to something abstract, yet it still serves the same purpose: to facilitate trade, store value, and build trust among people. As we move forward, digital currencies like Bitcoin may change the future of banking, investment, and even daily transactions. But no matter how advanced money becomes, understanding its history, from bartering to coins, paper, fiat, and digital forms, gives us a deeper appreciation of how it shapes our world. Now that we have traveled through time, from the early days of bartering to coins, paper money, fiat currency, and finally digital money and Bitcoin, it is clear how much money has evolved. Every step in this journey shows human creativity, innovation, and the constant search for better ways to trade and store value. Let's quickly recap the key points. First, bartering allowed humans to trade goods directly, but it had many limitations. It was inconvenient, inconsistent, and made storing wealth difficult. Then came coins, which were portable, standardized, and widely accepted. Coins allowed trade to grow, economies to expand, and even showed power and authority in their designs. After coins, paper money arrived. First in China and later in Europe, paper notes made trade easier and lighter to carry. With trust in banks, people could safely store and transfer money, making trade more organized and efficient. Then, fiat money emerged, backed by governments rather than physical commodities like gold. Fiat money relies entirely on trust, and modern banking systems evolved to manage, lend, and protect this money. Finally, the digital age brought money to computers, mobile apps, and the internet. Digital money made transactions fast and global. Bitcoin and other cryptocurrencies showed us a new possibility: a decentralized, transparent, and borderless form of money. Even though it is still volatile and young, digital currency represents the next step in the evolution of money. What can we learn from this history? First, money is not just coins or notes. It is a system built on trust, innovation, and human cooperation. Second, money has always adapted to meet our needs, whether to make trade simpler, store value safely, or allow global transactions. And third, understanding money's history helps us make better decisions today, whether it's managing our finances, investing wisely, or thinking about the future of digital currencies. Money has always been more than just an object. It reflects our society, technology, and culture. From trading goats to sending Bitcoin across the globe, humans have continuously shaped the way we create, use, and trust money. And as we move forward, the story of money will continue to evolve, perhaps in ways we cannot yet imagine. If you enjoyed this journey through the hidden history of money, make sure to subscribe and follow for more hidden finance secrets. Remember, the more you understand money, the more power and freedom you have to control your own financial future.